of investing with India's top portfolio managers on Alpha Moguls. Thursdays only on Bloomberg Quint.
Hello and welcome to Hot Money on Bloomberg Quint, India's first digital live streaming business news service. This is the show which gets you a complete wrap of all the stocks that are buzzing in trade. I am Darshan Mehta. Let's welcome our experts then. Sameer Kalra of Target Investing, Ashwin Agarwal of Newberry PMS, and Lancelot Cunha of WealthWiz Advisors joins us on the show. Today on Hot Money, we'll discuss stocks like Reliance Infra, Balrampur Chini, IndiGo, and CESC. Let's start with the first stock, and that is Reliance Infra. The stock has actually moved up significantly. It's up almost more than 10% from recent lows. Today also trading at the highest point of the day. The big question that we are asking our guest is this the right time to start buying Reliance Infra? Ashwin, you go first. You have a minute to give your opening statement.
So Reliance Infra is a case of deleveraging. So basically they have 30,000 crore of debt and the market value of equity is around 10,000 crore. So as you can see, pretty much the debt to market equity is 3:1. So out of the 30,000 crore, they have sold off their Bombay T&D business to Adani for 13,000 crores. And they are fairly confident they're going to win an arbitration award for the Delhi Metro of 3,500 crores. So you can see roughly half their debt is kind of gone in this. And they've said they're going to use all proceeds to just repay the debt. So what's left in the business is the Delhi T&D business, a couple of power generation assets. Then they have a subsidiary in defense, which is Reliance Naval. They have a 30% interest in that. And finally, EPC projects like roads, railways, metros. So basically, I think it's a very tough business to be in, though I am positive on the debt reduction side.
Okay, yeah, time's up. I'll get back to you, the point that you were saying. Sameer, would you buy Reliance Infra?
No, not right now. If you see the trend, last two March quarters have been loss-making. So I think even if this comes out as a loss-making, because there's a seasonality or a trend in the system, if it comes down, I think people will find it much more lower at the cost, at what it is right now. That 10% rally might be related to certain rumors coming into the markets. Second, the debt in what he's talking about, the deleveraging, there's a revenue attached to that. So there's a certain kind of profitability also, whether it's cash flow generating or not. But I think even that will go. So I'm not optimistic on it. But yeah, if you really want to buy it, you'll find a further downside on the March results.
Okay, that's about it. So it's a no from your end. Yeah. Lancelot, will you buy Reliance Infra at this point of time? Is it attractive?
No, I don't think so, because at this point in time the company is in a stage of restructuring. Like everyone says, the debt is high and you are actually selling your good performing assets in terms of profitability to pay off this debt. And probably at the end of this whole exercise, you'll be left with assets that are not really generating money. And I can't see that being made out to be a strong business case to have a long-term investment. Maybe a year or two down the road, if everything is clear, and then you look at what are the residual assets and what kind of residual profits you're able to generate, and then you can have a better idea in terms of valuation. If one is looking purely from a technical perspective, then there are various other indicators to say I'm buying for the short term, but as a long-term investment, I don't think it's a good opportunity, or there are better opportunities in the marketplace, so one should avoid this. Okay,
so I think the consensus view that we're getting in for Reliance Infra at this point of time is it's a clear avoid. So we'll throw this up open for discussion. Ashwin, you finish your point that you're making.
Even I agree. I don't think it's a good buy. Well, I just think that they are delevering, but yeah, they are selling their cash generating assets, which is the power business. They have said in their presentation that they're going to focus on the asset-light model in EPC and defense. But if you look at EPC, it's not really an asset-light model because you have a lot of working capital. So I mean, it's a very hard business to execute. There's there's a lot of competition in the space. Like you have L&T, you have like a bunch of road players. So on a long, it doesn't make a long-term investment case in my opinion.
Okay, Samir, in terms of valuations, it's one of the cheapest stock as far as valuation is concerned. Trading sub-book at this point of time, would that also not be, because the risk-return ratio, is that not favorable for Reliance Infra, because it's corrected so much also?
So see, it will be favorable for a person who's looking for that 15-20% upside and a trade out of it.
Okay.
I don't deny that. So that is a position, if you want to play out, you can play out. But if you see as buying into the firm and for a long term, I think you'll find lower sides as well. So I would wait right now to accumulate or even start accumulating right now. Until unless you want a 15% trade, you can have it even right now. I think 10% went out. So another 5 to 10% can be there.
Lancelot, any view on the valuations? Would that not attract you, or just that the business model is not suitable enough for a long-term compounding story?
I think the business model is not really suitable enough, because you see, there was this phase when Reliance Infra kept on accumulating assets and building up huge debt. And these assets cannot generate that kind of cash flow in order to pay back the debt fast enough. So if you look at maybe a year back and you look at the consolidated debt, it was over 78,000 crores. And if they have to pay off, when the group was generating a profit of almost 500-600 crores, it would take 100 years of profits to really pay off the entire debt. Now that doesn't make a good story from a return perspective as well, from an investor perspective. So I would stay away, wait for the entire restructuring to be complete, see what is cleared and what is left and what kind of profits are generated, and then take an investment call.
Okay, so I think the consensus view that we're getting in on Reliance Infra at this point of time, it's a consensus no from all our guests. They will actually have to wait out and see how, if any restructuring happens, how that plays out before getting into the counter. The next stock that we want to talk about is Balrampur Chini. It seems that the cycle seems to have turned for the sugar stocks. Not only Balrampur Chini, most of the sugar stocks have actually fallen anywhere between 30 to 40%. Balrampur Chini a little more because it's on the FNO side, so there was heavy shorting that was seen. But what we are asking now is that the stock's already down 35% this year. Is this the right time to start accumulating? Do you think that the cycle will start turning around? Lancelot, right time to accumulate, cycle will turn, or
yes.
is it more pain for the sugar sector?
I think this is probably a right time for the cycle to turn, because if you looked at the results that came out in the last quarter, we saw realizations improving on the sugar side.
Okay.
There was a significant improvement in the distillery business and the power cogeneration business, both in profitability as well as in revenue growth.
Okay.
So apart from that, we've now seen, it is a cyclical business. So you have to wait and see how the cane crops, do in the next season. And if that is also positive with a good monsoon, then you could see Balrampur Chini really doing significantly, because it has a large capacity.
Okay.
And the potential to, keep prices high as well as increase volumes is very large. So given the kind of drop that we've seen in prices, I think this becomes an opportune time to start looking at buying into this stock. And one needs to keep in mind the risks that are associated with this kind of investment, because it's cyclical in nature and there's a lot of regulatory risks. So sugar prices have gone up almost 50% in the last year. And if you look at
I'll get back to you. I'll get back to you. We'll finish this discussion. But Samir, your view on should someone buy Balrampur Chini?
So I don't think so. Sugar stocks are in the right place to buy right now.
Okay.
See, if you see 2016-17 was the highest cane crushing season. That resulted now in a higher sugar production. That's around 42% till Feb 2018. So that resulted in the sugar prices drop, and even recently removing the export duty by the government. So they are trying to support the prices and keeping them up, I'll say in a certain sense artificially. So there's not demand as much as the consumption is there. So that's why that prices are being stabilized. Now, if there's a reduction on the cane prices, I think it'll be a better position, but I think it's a little far off in few quarters.
Okay, so that's the view that's coming in. I believe you don't have a view on sugar stock. So we'll throw open the discussion. Lancelot, you were talking about using green shoots of the sugar cycle turning around.
Yeah. So what has happened is, see, if you understand why the government has taken off the tax on the export, because the prices, domestic prices are high, and they wanted to have more supply in the domestic market.
Okay.
Now, having seen that domestic supply has also gone up and prices have stabilized, they have decided that we will remove the tax on exports, and exports again become an opportunity. So if you see in the next sugar cycle, in the next cane crushing cycle, if you do have a fairly large crop, and typically how these cycles work is because the last, the prices for the farmers was high for the last cane crushing season, that is used as a base by most farmers to again plant higher acreage under cultivation. And if you have a good monsoon, then that would mean, the production would be high of sugarcane, and that leads to a better season for the sugar crushing companies. So I think there are risks in this kind of investment because number one, it's cyclical. There is a regulatory risk that you run because of the government can clamp down on prices. Okay. And the other good thing about Balrampur Chini is that its distillery and its co-generation business have been generating to its profits. It's also reduced debt significantly. So you look at the balance sheet, it's a lot stronger as compared to the last year. It has a buyback at 150 rupees, which happened. So I think that is also a positive for the company, that it's reducing its capital using cash wisely, and we could see it turning around.
Okay. Is Balrampur the best play that you would say in the sugar space? If you believe that the cycle can turn, which is the best play? And if you're saying that exports can again start, which would be the best
I think
play?
Balrampur Chini would be the best play because of the fact that they have tapered down debt significantly. So, given that can actually lead to better returns for shareholders. If your debt comes off and, in case of a downturn over a period of time, the downside risk is limited. And the upside risk is much higher if the cycle turns in your favor. Okay.
Samir, do you believe that this oversupply and pricing issue will persist for a long time for the sugar companies? Or do you have a vision that, probably we are getting near the bottom for a turning of the cycle?
See, now agriculture products are one thing which depends on another harvest to come in to even see that cycle get out of the system. My only worry in this sector is when the down cycle comes, everyone falls into that debt so heavily that while the cycle is upturning, no one is able to catch it up so fast because you're paying more money back to the bank rather than to the shareholder. So I would like to see companies where people in the upcycle are paying more to the shareholder rather than the bank. So that's why I don't feel any positiveness out of the sector. Even if the upcycle turns, there will be another export duty coming in. So these parameters happen constantly in the upcycle and the down cycle to support the whole system. Because if you see, farmers and the crushing sugar is the biggest support from the UP and Bihar. So, and especially when the election year is there. So I don't think so anything will come on the subsiding part to it. Because even the cane prices will be maintained from my side.
Okay, so I think we're getting a little contradictory views. Lancelot is saying that it's the right time to start accumulating Balrampur Chini. He believes that the cycle could probably turn, but he's also mentioned that there are risks in a cyclical business. Samir believes that there could be more potential downside that could come in. There could be drop on sugar stocks going ahead. So that's the view that we had on Balrampur Chini. Let's move to the next stock, and that is IndiGo. Now the counter has managed to correct sharply from the lows. The big problem that was there was the engine problems that was there, that led to a lot of cancellation and grounding problems. Financially not much of an impact, but market share wise, there will be a lot of change that will happen into the other airlines. Is this the right time to post the fall? Is this the right time to start accumulating IndiGo? That's the big question that we are asking. Samir, will someone buy IndiGo at this point of time?
I don't think so, because see, market is saying and the management is saying there's no financial impact, but I really don't understand that. If your 60 or 50 flights are being grounded and cancelled every day, how come there's no financial impact to that? Because that's around 30% of the total flights daily which IndiGo does. So I rather wait for the March quarter results and see the impact of it. Because even yesterday the news came out that Pratt is supplying now the replacement engines, but it'll take another 40 days to totally replace the whole system. So I rather wait for the March results and see the impact before I even take a call.
Okay, so March result is something that you will watch. Lancelot, will you buy IndiGo at this level?
Well, not really, because it is trading at a reasonably high valuation. It's almost 17 times its earnings, and that earnings could get impacted for one quarter. Though I believe that the problem with the engines is not a long-term problem. It's going to get solved in a quarter or so. So when you're making an investment, you really can't use that as a base to say that, okay, 1 quarter was bad or 2 quarters are going to be bad. So then the business is not good. So I think structurally the company is the best in that business because it has the best fleet, operates at the lowest operating capacity, operating margins are highest in that business, and there's a structural change because of affordability and the number of available airports going up. I think the business will grow, and IndiGo is the best player to take advantage of the growth. But at this point in time, valuations are expensive, so I would not be a buyer at this point in time.
Okay, valuation concerns at this point of time. And Ashwin, will you buy IndiGo at this point of time?
Yeah, I think I would. So I'm bullish on IndiGo. I think air travel's pretty much a commodity business, and IndiGo is the lowest cost operator of airlines. That means by default, in any commodity business, you want to be the lowest cost guy. So they have really proved the efficiency track record over a lot of years. And the key in this is the oil prices. So if you look at airlines, around 40% of their revenue is the fuel cost. So if fuel costs are low, they can price their tickets cheaper. That increases their load factor and it increases their margins. But it's a double whammy if oil prices go up. They'll have to price tickets higher, so there'll be lower demand, lower load factors, and they'll be making lower margins. So it's essentially the key thing to watch is the oil price. Also, another risk I would say is if competition expands a lot. So if there's new supply hitting up, that could probably be a risk. But overall, I think it's a great company in the long run.
Okay, so I think the view that we are getting is two of our guests do believe that it's not the right time to start buying IndiGo, but Ashwin does believe that you should start accumulating it. So we'll throw this open for questioning. Samir, do you believe that concerns are there for the entire aviation industry, or would you what about Spice or let's say a Jet, because they will be gaining market share on IndiGo's behalf, so would that be a opportunity for someone to get into those shares?
So Spice, we've been positive since 20 rupees. I'll tell you why, because there were two benefits that time. The crude prices came off drastically and there was a scope of improvement. Now when your valuations are high and you're best in the industry, your scope of improvement is very less. And with us and our analysis, I think second half will be higher crude prices. So I'm not that positive on aviation sector for this year at least. So I see a higher crude prices which will result in a fall in their margins. So I'm a little negative on the sector itself.
What about you, Lancelot? Since obviously it's the leader, so valuations will be comparatively better priced than a Jet or a Spice Jet. So would you be negative on the sector as such, or you believe that other airlines offer better comfort?
No, I think IndiGo is the best investment in this sector if one has to make an investment in the sector. However, I think the whole sector has got valued at a high level, and I would like to compare this with what happened in the telecom sector. See, the opportunity may be huge because structurally you have more and more people traveling by air. You have low prices, which means good amount of pricing capability, and you have new airports opening up as well as even overseas routes opening up, and which gives a much larger market. But the concern here is that at what price are you getting into this stock? And if you're paying 17, 18 times, which is far higher than almost, if you look at traditionally all the global players, nobody trades at 18, 20 times.
Yeah.
The market potential is what is attracting the high PEs. And that can correct, significantly if performance doesn't catch up. And with the kind of new competition coming in, like with more people looking at this and adding more flights, I think you are going to see the competition, and crude could be the other, spanner, could be the spanner in the works, which could create a situation where people suddenly derate this industry, and from a 17 PE, it could come down to a 12 PE.
Yeah.
So I think the risk return is not really favorable at this point.
What do you make of this move of, buying assets of Air India? Do you think it's a good move that IndiGo is doing, or they should totally avoid it?
See, I think that is a good move because if they get the routes of Air India has most of the prime routes in their things. So the slots that they have, Air India has, I think those are the most valuable asset for. It's not really the physical assets that would make too much of a difference. And IndiGo being a very, very conservative and company, they would be able to churn the assets to that extent and really extract the maximum out of them. And I think the government has also decided that they will not be adding debt to the transaction. So it's basically the assets and the routes that they are getting. So it's a good deal for them if they do get it.
Okay, it's a good route. And what's your pecking order in the aviation industry? Since you said that you like IndiGo, would you like the others also?
No, I don't like the others. I just think it's best to go with the lowest cost operator. So I would just go with IndiGo and none of the others.
Okay, so that's the view that we're getting in on IndiGo. Ashwin does believe that IndiGo is the right choice, but both are the guests, Lancelot as well as Samir, not too enthused with IndiGo at this point of time. A correction is something that they're looking at on IndiGo. And the final stock that we are talking about is CESC. A big correction, you know, everyone had that big fancy of the demerger which was finally announced, but post the demerger announcement, I don't think there's anything that's happened on the counter. It's down almost 25% from the recent highs. No doubt the demerger is still in place. That will happen in the near term. But is it the right time to start accumulating CESC? Lancelot, will you buy CESC at this level?
Well, not really, because, you know, though the demerger has been announced, the value from the power business is still you know, not really an attractive business to invest in, given all the problems that are associated with that industry.
Okay.
So, you know, if you're buying it for the other pieces, then you might as well wait for the demerger to get complete and then buy the individual pieces at whatever values there are. But here, primarily what you'll get is the power business. And so I don't think it makes sense to start investing into the power business at this point in time. Better to wait and see what happens if you are interested in the other pieces. So it's not really making an investment case at this point in time.
Okay, no investment case at this point of time. Samir, do you agree?
Yeah, I agree with them. See, when the demerger was announced, it went up from around 650 levels to 1200. Now, why the demerger is getting delayed is because the West Bengal regulator has given a no-go to this demerger. Their mention is that the structuring is not permitted under the regulations. Now, when the structuring is not permitted under the regulations, they have to come back to the drawing board, again restructure some way and find out a solution to it. Because till that time, I think the whole optimism of this demerger will fade out and it will come down further.
Okay, that's the view. So another no. And what about you, Ashwin?
So even I'm a no. So it's going to get demerged into 4 businesses: Generation, T&D, the Spencer Retail, and Ventures, which has the IT, a shopping mall in Calcutta, and the FMCG. I would be keen to look at the CESC Ventures, the IT, FMCG, and the mall. So depending on the valuations, maybe that would be a good buy, but not right now.
Okay, so I think it's a consensus no that's coming in on CESC at this point of time. So we'll throw it up open for discussion. Lancelot, what about you know, the power? Because the commentary that the management is saying that the losses are getting lower on the power business. They're saying Spencer will turn PAT positive in the next financial year. So I think the management is giving positive signs, but somehow the street is not too enthused. And 25% is a big drop. So any reason why this has happened?
See, I think, you know, even if you look at the power business, recently they got a negative order from the Noida, from the regulator regarding the Noida toll. So they'll have to put in almost 94 crores back into that company to pay for the, you know, the reversal that has come in. So, you know, there's a lot of expenditure, a lot of investment needed in that industry. And especially when the state electricity boards aren't giving you higher, you know, power rates. So I don't see how margins are really going to grow in that phase. Plus you have input costs also rising. So it is a tough spot to be in, and that is why you're not seeing much of interest from investors in general in the power sector.
But which are these? They have 3 or 4 businesses. Post the demerger, anything that looks attractive that, okay, post the demerger, this is the business I want to focus on of CESC?
See, it all depends on valuations. At this point in time, we're not aware as to what can be the valuation. For example, the retail business, you know, the Spencer business, can it get absorbed by somebody else like a Kishore Biani or maybe a Trent? And what kind of price would they be willing to pay? So if you're investing in this company for sweating the asset, saying that, okay, I'm buying it as a sum of parts, and then when I be able to sell off the individual parts, I will get more than what I've invested today. That might be a way of looking at it, but if that doesn't happen, or the valuations of those pieces are already high, then you would actually not be able to recover your money. So I think from an investment perspective, with so many uncertain things in on these asset values, it's better to stay
and
out.
overall valuation, do you find it expensive or it's reasonable?
See, because if you're looking at only power business, it is expensive. But if you're saying, look, take into account all these, now what can be realized on these different pieces is not really clear at this point in time. Because you don't have separate balance sheets of each of those businesses available. Once they get demerged, we'll know what liabilities are there, what's the cash generation in each of the business, and then you can actually assign values to them, and then probably you get a better sense.
Okay, Samir, same question in terms of once this demerger happens, what is something that you would look forward from CESC?
So I would look at the distribution business because they have around a 20% ROE coming over there, which others don't. And now they are concentrated to West Bengal only, so their expenses are limited to one state, and they're not looking to expand like very drastically. So that debt level, I'm more interested what part of debt gets divided to which company. So how that configures, I think I'll be more interested in the distribution business.
Okay.
Because generation business is always very tricky for, because it's controlled by eventually the state to give you the selling price. So, and that state I'm very much not optimistic it'll be more company friendly rather than the customer friendly. So I think power distribution business is where I would like to be more interested in.
And what about Spencer's, the retail business, the first source stake that they have?
See, the Spencer's business retail part, I'm really not that much of optimistic on, because that will be a heavy debted firm. Because the only point is over there, there's a lot of competition, there are a lot of lower margins over there. So your working capital is higher over there. So over there, I think as compared to future retail or any other Trent or something like that, I still go with a Trent or a future retail because they have that capacity to bear that expense. Other the CESC venture, it's again more of a holding.
I think there's an audio problem. I think your mic is a thing. So I'll just get back to you. Let's see if we can fix it. And among the other businesses, you said that you were more interested
in the ventures.
In the ventures. So what's the rationale?
The IT BPM business is good. It's a high ROE business. Also, their FMCG food products like packaged food. That's, I think, a better business than the power one, and also they have a good premium malls. But it also depends on the valuation, but that's the business that excites me the most out of the four.
Okay, so I think that's the view that we're getting in on CESC. No doubt the counter has corrected close to 25% from the recent highs, but still that is not and giving our guests the confidence to go ahead and start accumulating CESC. There could be more issues, and I think the general trend is that or the general thought process that has come out is that wait for the demerger and then pick and choose which are the right businesses that you would want to take on for CESC. But with that, it's a wrap on today's Hot Money. Ashwin, Samir and Lancelot, thank you so much for joining me in the studio today. With that, it's a wrap on this show. Ask BQ comes up next. Stay tuned to Bloomberg Quint.